Trading on shadows. In the spring of 2021, Wall Street was celebrating a rebound. The markets had recovered from a pandemic-era collapse. Stock prices were surging, and a new generation of investors had flooded into the game. But behind the glowing tickers and optimistic headlines, a quiet manipulation was unfolding, one that would soon expose how billions move in silence through digital shadows. The first clue appeared deep inside Axton and Company, a mid-sized brokerage firm in Lower Manhattan. Lena Brooks, a 27-year-old data analyst, noticed inconsistencies in the firm's after-hours trading algorithm. Certain trades, flagged as client overflow, were executed seconds before major market shifts. But these weren't coincidences. The timestamp suggested someone knew what was going to happen before it happened. Lena took her findings to her supervisor. Within hours, she was reassigned to a different department. Her system access was revoked. Days later, her computer was wiped clean. That's when she contacted the Federal Forensic Financial Crimes Division, FFCD, the same team that had dismantled the Remedica scandal a year earlier. Lead investigator Marcus Layton once again took charge, and his instincts told him this wasn't just one firm's manipulation. It was systemic. Through forensic tracing of digital trading logs, Layton's team uncovered a web of encrypted data streams linking Axton and Company to 3 hedge funds and 1 offshore clearinghouse in the Cayman Islands. The trading patterns were eerily precise. Thousands of microtransactions placed milliseconds before confidential announcements, mergers, product recalls, government contracts. The only way those trades could exist was if someone inside the regulatory system was leaking information. The FFCD joined forces with the Securities and Exchange Commission's Forensic Analytics Unit to run a digital pattern reconstruction. Over 4.2 million transactions were mapped against public announcements. The result revealed a pattern so consistent it could not be coincidence. It was designed. To the public, markets looked random. To those in the shadows, they were choreographed. At the center of it all was a secretive investment entity called Helios Capital Partners, a fund officially registered in Delaware but operating through digital proxies across Europe and Asia. Its fund manager, Victor Crane, was a well-known Wall Street name, charming, philanthropic, and politically connected. Crane's company reported astonishingly consistent profits, 17% quarterly growth for 8 straight quarters. To seasoned auditors, that was statistically improbable. When forensic auditors obtained a subpoena for Helios' internal accounts, they found sophisticated data obfuscation layers, programs designed to distort financial records. On the surface, Helios appeared compliant. Underneath, the numbers were being rewritten through encrypted timestamp manipulation. Each transaction was logged into a private blockchain node, hidden from oversight, accessible only through authorization keys that pointed to the Financial Compliance Office of the Federal Market Oversight Bureau, FMOB. The shock was immediate. Someone inside the government, the very institution meant to enforce fairness, was feeding insider information to Helios. Forensic teams tracked the access logs and traced the leak to Deputy Director Alan Reese, a career regulator with 25 years of spotless service. But forensic audits don't lie. His encrypted messages, recovered from deleted drives, contain coded instructions to Crane's traders. Layton's team also discovered that payments to Reese were disguised as consulting fees routed through a law firm's escrow accounts, totaling $42.3 million over 3 years. By late 2022, the forensic investigation had ballooned into one of the largest joint operations between the FFCD, SEC, and Department of Justice. Undercover agents infiltrated Helios offices as IT contractors, capturing live data streams. What they uncovered was breathtaking. Helios had developed an AI-driven trading engine that predicted and exploited confidential information by matching data patterns from government emails, regulatory filings, and embargoed press releases. The AI didn't hack. It was fed. When the evidence was presented to federal prosecutors, indictments came swiftly, but Crane didn't go quietly. In a last-ditch move, he attempted to destroy key evidence, wiping servers and relocating data to offshore backup centers. The forensic team, anticipating the attempt, had already mirrored the drives. The digital footprints remained, unerasable, undeniable. During the trial, prosecutors presented a forensic audit report, a 600-page dossier detailing how insider data had been monetized in real time. The courtroom was silent as the evidence scrolled across the screens, spreadsheets showing profits aligning perfectly with unreleased announcements. The defense argued it was predictive modeling, but timestamps, precise to the millisecond, proved that the trades were placed after private meetings but before public disclosure. In a pivotal moment, Lena Brooks, the whistleblower, testified. Her voice trembled, but her words were steady. I wasn't supposed to find it, but once I did, I couldn't unsee it. Crane was convicted of securities fraud, conspiracy, and obstruction of justice. Deputy Director Reese was sentenced to 20 years for corruption and abuse of office, the first high-ranking federal regulator in U.S. history to face conviction for insider trading. The scandal shook Wall Street. Several major firms underwent emergency audits. Congress demanded stricter real-time oversight for algorithmic trades. But for forensic investigators like Layton, victory was bittersweet. For every one case we expose, he told a journalist, there are 10 more buried under code. The markets eventually stabilized. Investors regained cautious trust. But deep in federal archives, the trading on shadows case remains a stark reminder of how easily technology and greed can twist even the most regulated systems into silent conspiracies. Moral and call to action. The true cost of greed isn't measured in dollars. It's measured in trust. Every hidden transaction erodes a foundation of fairness that markets depend on. When the shadows seem profitable, remember, transparency isn't a burden. It's the only way civilization can trade honestly with itself.